Hi there, welcome back to Market Fatafat. Thank you so much for staying tuned with us on ET Now. Let's keep it going with all the big buzzers. But now on the technical front, we have Vaishali Parekh, Vice President at Technical Research, Prabhudas Lilladher, joining us on the show. Vaishali, thanks so much for taking the time out and joining us. Now, the next stock that I wish to highlight and talk about is Oberoi Realty in today's trade, because very seldom moves coming in across this stock, and this is on the back of a brokerage note coming in by Nomura today, wherein they've initiated their buy rating with a target price of 2,500 rupees per share. So that's quite significant compared to where the stock is trading right now. And a very positive note coming in from Nomura, in fact, wherein they're saying that they expect solid pre-sales going ahead for the stock, and also healthy cash generation is what they're looking at. The company seems to be poised for aggressive business development, and pre-sales front, they're expecting to witness a 40% CAGR over FY24 to FY27 with a 50% plus embedded EBITDA margin. So the operating metrics, in fact, are looking rather healthy based on what Nomura is penciling in going ahead. When it comes to the hotel and annuity revenue on the cumulative basis, they're expecting this to record 35% CAGR between FY24 and FY27, and they're also expecting anywhere between 3 and 4,000 crores per annum of operating cash flow until FY27. This is if you keep aside the business development, annuity asset investment as well. Overall, very bullish note coming in. Yesterday too, we had a UBS note on Oberoi Realty, but today the stock is also holding up pretty smartly, up almost 5% as we speak.
Alright, that's the day coming in on Oberoi Realty. But moving on, when we talk about ICICI Lombard, because given the insurance space, all these stocks are buzzing. And Vaishali, first of all, a very good afternoon and thank you so much for your time. And Vaishali, first up, take us through your view on ICICI Lombard.
Very good afternoon, everyone. Yes, thanks for having me on the show. So ICICI Lombard, well, technically very well placed, and today we are seeing some revival coming in. So I would say that at these levels, it looks pretty attractive, and I think we can see a good run-up coming from here on to look for a target of at least 2020.
Okay, so those are the levels Vaishali is spotting on ICICI Lombard. Let's talk about another stock that's in focus today, and that's PNB Housing, because they're expecting to reach 1 lakh crore AUM for retail loans by FY27. That's the word coming in from MD and CEO of the company, Girish Kauski, who also guides for 17% retail loan growth by FY27. Let's go across and take a look at what he had to say.
The guidance on retail growth this year is 17%, and we'll be able to breach that by a small margin. And for next couple of years, we'll be able to grow at 17 to 18% on retail. By FY27, 68,000, which is retail book, will cross 1 lakh crore by FY27. That's the plan on retail. Corporate, the book is 1,500 as of September. We plan to restart corporate in a very small way. And by FY27, corporate book should be about 7 to 8,000. Overall book about 1 lakh and 8,000. The reason why we did this, one, of course, was profitability, and second was to de-risk, because we reduced corporate. We don't want to grow the corporate book, in future. The focus is going to be very small on corporate, and therefore we have started all these new verticals. If you look at in last 8-9 quarters, I think profitability has doubled. So last year, PAT was about little over 1,500 crores. So I think there will be a PAT growth of about 20% going forward.
All right, then that's the management of PNB Housing Finance. But moving on, let's put the spotlight on Granules India, because just yesterday the stock was hammered in trade after the company was actually issued Form 483 for one of its key facility of Telangana, as well as 6 observations were also issued by US FDA, with their inspection done from 26 August and 6th of September, because this is one of the key facilities for Granules India, I understand, because more than 50% of the company's revenue will be coming from this particular facility itself. And Granules India, on the charts, if you will see, the stock, the last time I checked, was actually almost flat in trade. But when you see that now there's a clarification that has come out from the company, where they are saying that yes, after the implications, they are seeking a meeting with FDA for a re-inspection. They are also saying that the FDA action may impact the new approval products, but the existing revenue and the business will not impact the site. So that's the clarification coming in from Granules India, but nevertheless, definitely it might not give any respite to the stock price, and as you can see right now, the stock is almost flat in trade today.
Absolutely, very flat moves coming in on Granules India today. Let's move on, talk about a stock that's holding up in gains of approximately 2% in today's trade, and that's Apollo Tyres. Vaishali, you've picked up that stock for us. This is a stock that we don't usually discuss on the show. Tell us what's making this stock attractive to you, why you picked this out on the charts, because last 1 month you have roughly 9-10% return coming in. So tell us what's the outlook going ahead.
Very long time on near-term basis, Apollo Tyres has given a breakout and with volume. So I would say 500 to 505 acts as the near-term support. And if this momentum continues, I think this stock can go towards 560, 565. So that is the reason why I have picked up. And there is a good volume, above average volume as well. So I'm focusing on this stock.
Alright then, that's about Apollo Tyres, but moving on to the next counter then, and Ria, take us through what's happening with Thyrocare and why the stock is in focus today.
Well, absolutely. So Thyrocare is in focus today since the company has made another tranche of equity investments of 100,000 US dollars, which is equivalent to just about 84.9 Indian rupees, and in Thyrocare Laboratories Tanzania Limited. Now remember that back in September, the company had announced the establishment of a 50-50 joint venture or a JV company in Tanzania to provide diagnostic and healthcare services, which is directly related to customers, which is similar to the company's main line of business. And the total investment made by the company to date, including the current investment, now amounts to USD $475,000 or roughly about 3.96 crore rupees. And the remaining equity infusion will be made by the company in one or more tranches depending on the JV company's business requirements. Now, reacting to this news, the stock was up around 3.5% this morning, but right now it has slipped into the red, trading with cuts of 0.5%.
So that's the news flow coming in on Thyrocare under some pressure as we speak right now. Let's shift attention and talk about the stock that's been a buzz all day today, and that is Swiggy. No doubt on the back of their Q2 numbers that came in yesterday. Let me just quickly take you through what the earnings fine print looks like. Revenue is largely in line with what we were expecting on a sequential basis. It's up 11.8% at 3,601 crores. Calculated EBITDA loss has widened this time around, so it's a slight miss on our expectations. The net loss also has widened to 625.5 crores compared to 611 crores on a sequential basis. However, if you take a look at both of these metrics on a year-on-year basis, they have improved nominally. If you take a look at the food delivery business, GOV is up 5.6%. You also have the food delivery PAT that has seen a massive uptick coming in of 81% sequentially. So very good performance coming in from food delivery. However, quick commerce is the one with a mixed bag performance coming in, because your GOV and adjusted revenue have gone up more than 24% on a sequential basis, but the quick commerce net loss has widened to 317 crores compared to 280 crores sequentially. So this is a pocket of worry going ahead, and also because there's a lot of competition heating up in quick commerce. So that's a slight point of worry coming in for Swiggy. But lastly, they've also said that at the consolidated group level, they expect to be positive on the EBITDA front by Q3 of FY26. So that's the outlook coming in on Swiggy. Stock up 3% as we speak.
Alright then, that's about Swiggy, but since yes, Nehi, the numbers are out, but where is the company headed in comparison to Zomato? That's the question we posted to Rahul Jain, who's the VP and Research Head at Dolat Capital. So let's go across and listen into him.
In case of Zomato, what they have done is an exemplary execution over the last couple of quarters. So it's a proven thing that they have created even the QC business profitably on an adjusted EBITDA basis. So I think that kind of credibility is going to stay with them for much longer. Swiggy clearly seems a couple of years behind in terms of achieving those objectives, and we are going to see intense competition in next couple of quarters. So it is a good possibility that these guidance which they are suggesting may not likely happen with the mentioned timeline. And as a result, missing guidance could come as an additional burden to the discounted valuation that the business is trading at.
Okay, so that's how Swiggy and Zomato stack up against each other, at least according to Rahul Jain. But Vaishali, coming to you now, you've picked out the high flyer today, HDFC Bank, stock sitting at a fresh all-time high. Tell us what's the outlook going ahead. Do you believe that this stock has in it to scale more record highs going ahead, or time now for some slowdown?
Well, I would say today was an obvious hint. In the morning, we saw a good clear breakout coming about 1840 levels. and so we have picked up the stock because the stock gets into the new price territory. So I would say continue holding the stock with a trading stop loss and look for a target of 1950 to 2000.
All right, then that's about HDFC Bank. But moving on, let's also talk about some of the cement counters, because day after day we are getting all of these brokerage houses coming out with their reports. And today we have the note coming in from Goldman Sachs, where they're saying that for outlook to FY26, the demand is expected to pick up, the new supply to limit the pricing, as well as profitability improvement is on the cards. For FY25 will be one of the weakest years for the cement profitability in the recent past is what they're highlighting, because what we have witnessed is the consolidation in the market share, capacity and resources will sustain premium valuations for the large players is what their take is. The demand and the supply, they do expect demand growth to recover, but supply to keep the utilization levels in check. They expect demand growth of 7% in FY26 and 4.5%, that's lower than 7% in FY25. And the consolidation wise, they are saying that capacity expansion, acquisition and limestone auctions all points to further consolidation. The coal and the oil prices are key monitorables, and green power mix, freight optimization are some of the key cost reduction levers that the company have been focusing on. So on the back of this report, all the cement counters are in focus today.
Okay, well, cement counters in focus. You have ACC trading with cuts of 2%, so slight pressure building up on all of these counters. But let's move on, and Vaishali, you've picked out Concor for us, Container Corporation. You know, the stock has absolutely not done anything if you take a look at this in the last 6 months, year-to-date basis. In fact, last 6 months, it's given a negative return of 10%. Tell us what's the outlook on the stock going ahead, and are you penciling in some better days for the stock now?
That's precisely why the reason why I have chosen this, because it has shown decent amount of correction, and it is showing signs of bottoming out at around 770, 780. So now it's on a verge of a breakout. Look out for this stock about 855, 860. If it sustains about that, we are looking at 880, 900 levels.
All right, then that's about Concor. But moving on, and Ria, take us through why Aurobindo Pharma is in focus today.
Well, absolutely. So, Aurobindo Pharma is in focus since the company has released a clarification in reference to various news items that were published recently that suggested that the Andhra Pradesh state government had lodged a complaint with the CID to inquire into how the YSRCP, when it was in power, had forced the Kakinada Infrastructure Holdings Limited, the promoters of Kakinada Seaport Limited, to transfer 41.12% stake of the port to Aurobindo Realty and Infrastructure Limited in September of 2020. Now, the company has said with regards to this that in some of the media reports, the name of Aurobindo Pharma Limited has been tagged in the news items, and in this regard, they have clarified that Aurobindo Pharma or its subsidiaries are in no way connected with the ownership or operations of Kakinada Seaports Limited and Kakinada SEZ Limited, including Aurobindo Infra Private Limited. So, on the back of this, the stock is still seeing some selling pressure, trading with cuts of 0.5% as we speak.
Okay, Aurobindo Pharma still under some slight pressure despite a clarification coming in from the company. But on that note, we'll step into a short breather on Market Fatafat and keep it going with all the stocks and news just on the other side. We'll be right back. You stay tuned. Hi there, welcome back. Let's keep it going with all the stocks that are in focus today. And Bajaj Auto is one such stock that's in focus on the back of a brokerage note coming in by UBS today. They've maintained their sell rating on the stock with a target price of 7,900 rupees, and this is on the back of the Bajaj cut price action that the price action that Bajaj has taken of cutting prices of Freedom 125 by 5,000 and 10,000 rupees for the entry and the mid variant respectively. This is just within 5 months of its launch. Now, since the launch, Bajaj has dispatched over 80,000 units to dealers, while Vahan retail stands at just 34,000 units. The variance between the dispatches and registration explains the price cut, and they also understand that select Pulsar variants have also seen price cuts post Diwali. So on the back of this, UBS has cut the price. They've maintained a sell rating rather, and they see the potential downside risk to the street's estimates as well. So very bearish note coming in from UBS on Bajaj Auto. On the back of that, the stock is lower by 1%.
All right, that's the take coming in on Bajaj Auto. But the second half of this financial year is poised to be better than the expectations, and those are the words coming in from Rakesh Sharma, who is the ED at Bajaj Auto. Let's listen in what else he had to say.
half of this financial year, April-September, the motorcycle industry was growing at about 6%. But this has perked it up, and I think we are looking at something like October to March period at about 8% kind of a growth. So that it's a very good impact of the festive. The beginning of the year, we were hoping that the industry would grow at 6 to 8% with higher growth in the upper half. And it's good. I'm not saying that we are surprised, but we are satisfied that that is the trajectory which the industry is unfolding. That was our assumption at the beginning of the financial year also. And first half was at the lower end of the expectation. Now it is looking like at the higher end of the expectation. So I won't say that it is a big surprise or anything, but yeah, we are satisfied.
Okay, well, let's talk about a stock on the technicals. Vaishali, you've picked out Apollo Hospitals for us on the charts. Tell us what's the outlook going ahead for this one, and what are the levels that you're spotting?
So we have been seeing Apollo Hospital has been consolidating for a very long time, and since yesterday we saw a new round of momentum setting in. Today also there is good volume and the chartical pattern looks quite positive. So I think one can buy at these levels also, or maybe buy in a dip near 7,000, because 7,000 is the near-term support. And once this momentum continues, I think one can look for a target of 7,500 to 7,600. So this is a stock which has already got in a trend, and we have a positive outlook on this.
All right, then that's about Apollo Hospitals. So moving on then, and let's put the spotlight on Supreme Industries then, because today we do have a brokerage note coming in from Jefferies, continue maintaining their buy, target price at 6,450 rupees. What Jefferies is saying is that the management expects healthy volume recovery of 20% plus in the second half of FY25. The recovery is to be aided by channel stocking, seasonality as well as new capex. The pipes capacity is expected to grow by 13% on a YOY basis by March 25, and the growth is to be higher than the peers, and that can actually help them further gain some more market share. The PVC price is slightly up by 5% over October-November 2024 to 78 rupees per kg now, and the view of Supreme Industry as a good play on plumbing, agri as well as infra is what Jefferies is highlighting. And overall they estimate FY24 to 27 having an EPS CAGR of 22%. So that's the take coming in on Jefferies. On Supreme Industries, the stock is holding on to the greens right now.
Okay, so rather flat, but managing to stay towards the greener side is Supreme Industries. But Ria, you've picked out RVNL for us. It's on the back of yet another order win coming in. Tell us and take us through what the details of this orders look like.
Absolutely. So RVNL has received a letter of acceptance from East Central Railway for the design, supply and the commissioning of the traction substations with associated switching posts for the upgradation work of the electric traction system. And the cost of work for this order is approximately rupees 186.7 crores, and the estimated contract period is 540 days. Now we've seen good moves coming in on the stock price as well. Right now the stock is up around 0.7%, and even on a year-to-date basis the stock is up around 142%. So keep an eye on RVNL on the back of this.
All right, then that's about this particular company. But Snehi, today JSW Infra is also in focus today.
Absolutely. So JSW Infra and focus on the back of a brokerage note coming in by Investec. They've initiated a buy rating with a target price of 370 rupees, and they believe that JSW Infra is on track to deliver 20% plus revenue and EBITDA CAGR over FY24 to FY30, and growth will be fueled by third-party cargo growth at new terminal and robust growth in the JSW Group traffic FY27 onwards. They see significant optionality of new concessions given the Government of India's aggressive port privatization targets, management's opportunistic approach and robust balance sheet. The long residual concession life and strong growth visibility is something that's looking good to them, and JSW Infra's premium valuations look justified to Investec. On the back of that, initiated a buy rating with a target price of 370 rupees. Stock has given up the initial gains that it has logged early in the morning, but nonetheless trading with gains of roughly 1.5%.
All right then, moving on, and let's also put the spotlight on Nazara Tech, because just a while back we have the news flow coming in on this particular company, wherein Nazara Tech as well as Listo has signed an LOI to launch the growth protocol, and the letter of intent is to launch this particular protocol built purpose for the digital marketing and growth applications on the blockchain. Now, the growth protocol is a purpose-built L1 blockchain and a collaboration between both of these companies. If we talk about, and the company also expects that this is designed to revolutionize the digital marketing landscape overall. If we talk about the other company that the company has collaborated with an LOI, Listo is a gaming world's one-stop shop that has been built through playtesting, acquisition and retention tools with the game finders opportunity to play for the rewards. So all in all, a positive news flow coming in on Nazara Tech, and the stock is also holding on to the gains of close to 1% right now.
Okay, good news flow coming in for Nazara Tech. Let's refocus, talk about Alembic Pharma, because we've just got this news flow on Alembic some minutes ago. The company has announced that they have received the tentative approval from the US FDA for its ANDA for olapatadine hydrochloride ophthalmic solution USP, which is an over-the-counter solution. Now, this solution has an estimated market size of $22 million in the US for 12 months ending September 2024. This is according to the IQVIA data. It's a positive news flow coming in for this company, and this solution is actually used to treat itchy eyes. So that's the news flow coming in on Alembic Pharma. Sharp spike, in fact, a couple of minutes ago when that news flow came out, but has fizzled out, but still trading with gains of almost 0.1%.
All right, that's the take coming in on Alembic Pharma. But time now for the word on the markets, because earlier today we caught up with Julius Baer's Mark Matthews on what he makes of the macro picture and where the growth is headed. Let's go across and listen into him.
It doesn't particularly look more attractive after the recent correction because the earnings have been downgraded by around the same amount that the market is corrected. But I still think it's a good market, and I think the reasons why it has come down a little bit, most of them will move in the rearview mirror. GDP growth, which was very soft in the most recent quarter, that I think is in the rearview mirror because it was due to the heavy rains, it was due to the government spending being delayed and the government prioritizing welfare spending instead. I think now the big Maharashtra state election is behind us. The government will start to increase capex again. And the RBI, which had told banks to sort of slow down their credit, well, that has happened, and HDFC Bank has brought its credit to loan ratio down to a very reasonable 80%.
Okay, that's the word coming in from Mark Matthews. But on that note, I'm afraid we've wrapped it up on this edition of Market Fatafat. Thank you so much for tuning in and watching. But as Shrishti and I bid you goodbye, you still stay tuned to ET Now because Closing Trades is up next.
If you like this video, then like, share and subscribe to ET Now.